Hey there, everyone. It's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Happy Friday, and welcome to the first full week of 2019. It is the first full business week. We don't have any holidays here, so it is business as usual, as my headline said. And the markets did experience a pretty good week overall. There was not a ton of volatility, which is good. You know, over the last 2-3 weeks, there has been a massive amount of volatility. And this week it calmed down a little bit. And so that is a good thing. We didn't see a lot of economic data released into the market because the government shutdown just prevents that data from being compiled and being released. But there was still some important things going on. One of the reasons that we saw less volatility, and I'm going to get to some charts here in a minute to show you kind of what's going on and to break it down for you, but one of the reasons that we saw less volatility is that Chairman Powell of the Federal Reserve did speak before Congress, and he used the word patience, that the Federal Reserve is going to have patience when it comes to the pace at which they are increasing short-term credit. It was thought just, maybe a month ago that we might see another 3 or 4 Federal Reserve increases to credit. But recently, especially with all this volatility and with some of the economic data that has gone on within the last month, the market was worried that the Federal Reserve would go too far. And so what Powell said is that we're going to be evaluating the data on a day-to-day basis, and we're going to have some patience. And so the stock market liked that and has calmed down a little bit. And the bond market also benefits from that lack of volatility, that things just aren't nuts. Now, interest rates finished the week slightly worse than where they were last week, but we have received such benefit here over the last about month. They're still at wonderful levels. And so let me get to the charts here and kind of show you what is going on. So what we're looking at here right now is mortgage-backed securities. And it's what's called Japanese candlestick charting. And so what I want to show you here is a little bit longer term. And we'll get to the chart here in a second. And you can see that now the higher this goes, the better interest rates are. So each one of these little bars represents a day of trading, and the higher this goes, the better yields are. So this is the price of a mortgage-backed security, and so the higher the price, the lower the yields. And you can see here we've got this trend started here, and that we've just been kind of marching upward, which is causing interest rates to go down. In a nice, real good trend line, and it's still in play. We have not broken this trend. So even though this is today, and this would be Monday, even though things are a little bit worse here than where they were on Monday, you can see that this trend line is still in place. And this blue line here is the 200-day moving average. So we crossed above that a couple of weeks ago, which is a good thing. So we're still above the 200-day moving average. We're still on this upward trend line. And so that is all a very positive thing. Now, when it comes to the stock market, I'm getting that trend or showing you the data here. And I'm going to go a little bit further. But you can see back here, each one of these days, the little bars are much smaller, and then all of a sudden, whammo, here we go. We've got these big bars, and this is all this volatility. So the stock market has recovered a little bit. Again, this is much more inherent that the higher this goes, the better the stock market is doing. So you can see we've recovered a little bit, but these little bars are not quite as big as they were just a couple of days ago. So that's kind of how these charts work, and you can kind of see what's going on in that regard. So bottom line is interest rates are still at a really, really good level here. Now, in terms of economic data, we did see a little bit released in the market. Today was also something that was positive for interest rates and mortgage-backed securities, and also the stock market. It was the Consumer Price Index, and that measures inflation at the consumer level. Headline numbers showed that it went from 2.2 down to 1.9. So that shows that inflation pressures are moderating a little bit. But again, that's a headline number, so that includes the volatile food and energy component. And if we strip that out, then we get to the core number, and that was tame. It was 2.2, which was what it was the previous month. So that wasn't a big surprise there. Bottom line is interest rates are at pretty good levels. The volatility, even though it subsided a little bit here this week, it is still in play and it is going to be volatile. It's just a matter of when it happens again. And I think everything right now is just set up for interest rates still to be at good levels. Again, there's going to be some days that are going to be worse than others, but we're seeing kind of this shift here going on in the market. And right now, interest rates are benefited from where they were just earlier in well, I guess last year. So we're at levels here. I'll go back to the charts. You can, if we go and take a look at things, if we go back to mortgage-backed securities, we can see that interest rates are at a level, and I'll go a little bit further here. We'll go back about 2 years, that we are, again, higher is good. So we're back about this level, which is where we were in September of 2018. So that is a positive trend. We're at rates not seen since September of 2018. So that's good, and that's still in play. But, as I said, volatility is still going to be there, so we will keep you informed. If you have any questions, please give us a call. We're always happy to help. If you're working this weekend, so are we. If you have any clients that need any help and need any direction on what to do about interest rates, that's, we know this stuff. So we're happy to give some good advice in that terms, as well as how to integrate their mortgage into their overall long and short-term financial goals and objectives. So give us a call if there's anything we can do. Thanks for joining me with Java with Jared. Happy first week, full week of 2019, and we will talk to you soon. I don't know about you, but my phone all of a sudden started ringing pretty good here, so it looks like clients are wanting to kind of start 2019 here on a positive note and get a house. So hope the same thing is going for you. All right? Thanks for joining me. We will talk to you soon. Bye-bye.